these are incredibly fragile times, highly volatile times, and you're certainly seeing this in the markets on a minute-to-minute and an hourly basis. So we'll see what the numbers look like. I think it's fairly clear that inflation is going to be high for a while in terms of relative to the Fed's target. So in some sense, this one number, I don't think is going to make that much of a difference to what the Fed has signaled at this point.
We talked earlier, Gita, that there's a lag effect when a central bank tightens. And all of the, not leading or lagging, but the coincident indicators keep showing that inflation is still a problem. Is it possible the Fed could overshoot, in your view? Do you agree? It's 98%, another 75 basis points. Do you think they need to stick to that to handle what we're seeing, this hot inflation that we're seeing in around the world, really?
I think the odds of calibrating it too much or too little at some point is there. These are real risks. There's so much uncertainty. The global environment is changing so rapidly that, that I think should be expected. But that said, just if we go with the path that the Fed has signaled, we're comfortable with that. We think that that path is what is needed to bring down inflation durably. And yes, it will have pain in the sense of raising the unemployment rate from its current extremely low level of 3.5%. But that is what is needed to bring down inflation, because otherwise you're going to be in a spot where you're tackling runaway inflation, and that's not where you would like to be.
What is the IMF's view, Gita, on supply side remedies versus just killing demand that the central bankers use? And I'm mentioning that in light of what happened in the UK, when that was not adding to debt equity ratios in any, or debt to GDP in the UK. It was not a huge amount that it was any, and we already have a much higher debt ratio here in the United States. So Truss tried to address some of the supply side concerns with taxation and other things, and you saw what happened.
I mean, without a doubt, improving supply always helps, right? Making sure that you have an environment to have higher levels of productivity and higher levels of supply absolutely helps. But at this point, the question is what kinds of supply can you bring on and as quickly as you can? So we'd like to get more people back into the labor market that have left following the pandemic. We'd like to see more sources of energy supply on the market. But this is not happening very quickly at this moment. So I think countries do have to deal with addressing the very high levels of demand that they have in their economy. For instance, the energy crisis, I think for sure there has to be moderation in demand to be able to address it. And we certainly need to put systems in place to be able to get more supply, but it takes time.
The IMF, obviously, in a perfect world, you would want rates to stay low for developing countries and to spur investment and everything else. So it seems counterproductive that this is such a blunt tool that we have to use. I mean, it's the least bad option.
I mean, we absolutely want to see full employment around the world. We want to see investment. We want to see growth everywhere. Okay. But we have an environment where inflation is too high in the major economies. History teaches us that that kind of an environment, if not corrected, will lead to even more risk and even worse spillovers to emerging and developing economies in the future. So I think that bringing down inflation has to be the #1 priority.